Hi, everybody. Today is Friday, September 18th, and welcome to week 27 of the Genus in Focus videos. My name is Sue Talbot, and I'm a partner and portfolio manager here at Genus. And with me today is Mike Thiessen. Mike is also a partner, and he's the Director of Sustainable Investments. So Mike, let's start with the review of the markets. It was another volatile week in the markets. Things were positive at the beginning of the week and started to change towards the end. So can you fill us in on the details on what happened?
Sure. Yeah. So we ended up quite flat for the week. So both the S&P 500 and the TSX were quite flat, but there was a lot of movement, like you're saying, especially with big technology companies. So Facebook was down about 5%, Amazon down about 5%, Google and Apple were down about 2.5%. So a lot of movement there. Even in Canada, our big tech company Shopify was down about 7%. So a lot of movement with technology, and I think it's a lot of people just taking money off the table. These tech companies have done so well over this whole pandemic. So people are starting to get out of those, or at least trim their positions there. But we're seeing the value trade start to build up. So more value type companies are doing well. And that's a significant part of our models is value factors. So that's good for our funds. And then we also saw a lot of small cap companies doing well. And I think that's great for the overall economy. We want to see a lot of these smaller companies recover. Overall, quite flat on the week, but a lot of movement within.
In terms of any activity in our portfolios this week, did we do anything?
So this week we did a few small changes. Usually we do the bigger changes at the beginning of the month when we get new data and our models come up with new scores that we then use to do our rebalances. But this week we did trim some technology, especially semiconductors, and move that into more value-based sectors like industrials. We also trimmed some mining companies. A lot of mining companies that we've held in the portfolios have done extremely well over this pandemic, and so they're now larger positions within our portfolios. So we were wanting to trim down those positions, especially as momentum has started to become more negative for some of those mining companies. So we just want to lower our exposure there.
Okay, so next I wanted to ask you about a Globe and Mail article that was published on Monday, and the headline said that fossil fuel demand has likely hit its peak. So in the article, BP, who is one of the largest oil companies in the world, is predicting fossil fuel consumption will shrink for the first time in modern history. It also goes on to say, however, that overall demand for energy will grow, but the supply will change. So can you explain what that means?
Sure. Yeah. So BP had an interesting report that they put out. So they put out these reports about oil consumption and where the peak is predicted to be. Usually the peak that they predict is 2030 or 2040. But they say under certain scenarios, the peak could be right now because more people are working from home because of the pandemic. So there's less people, driving to work or other places. And electric vehicles have really become a big part of a lot of car companies. So they're predicting that more people will be driving EVs, and renewable energy is really rising at an exponential rate as the overall share of energy production. So in terms of supply, that would mean that supply would need to be coming down if oil consumption is going down as well, or else you're going to see a crash in oil prices, similar to what we saw earlier this year. And then so if the supply of overall energy is decreasing in terms of oil, it's increasing in terms of renewable energy, and probably other fossil fuels like natural gas will likely continue to increase actually.
Right, and you mentioned the Alberta oil sands. So Canada is a large producer and exporter of oil in the world. In fact, we're the fourth largest, with the majority coming from Alberta oil sands. So what will this mean for Canada's bottom line?
Yeah, so I think it'll be obviously negative in the short run for Canada, for Alberta. But I think Canada has done so well to adapt to this new kind of pandemic style economy. So I think that we're just going to have to adapt. And also we have so many other materials in Canada that are needed in the low carbon economy. So in the long run, we'll be able to adapt. But I think in the short run, it will be quite a negative hit for the Canadian economy.
Yeah, and this pandemic really has fast-tracked,
Yeah.
the changing, we have to start changing things, and it's great that we're positioned well for that.
Yeah.
So let's pivot here and talk about a new report that we plan to make available in our September 30th client statements. And we're going to be introducing a net impact report. And I believe we're the first firm in Canada to provide this type of metric. So can you explain what this report measures and why we decided to make this report available to our clients?
Sure. Yeah. So we're quite excited about this new metric. Like you said, we're the first ones in Canada to do this. So we're basically looking at positive impact that the portfolio is making and the negative impact that it's making. And we're combining those to make a net impact score. So what's the total impact of your portfolio? Because we believe that all portfolios are making an impact. You might be making a positive impact or you might be making a negative impact. And we want to know what those impacts are. In calculating the positive impact that a portfolio is making, we're looking at the percentage of revenue within the portfolio that is coming from positive impact sources, and they have to be contributing to a UN Sustainable Development Goal. And then on the other side, with negative impact, we're looking at what percentage of revenue within your portfolio is coming from negative sources, and these are things that are detracting from UN Sustainable Development Goals. And then we're combining those to get kind of an overall net score. So we're going to be measuring all of our funds, but our fossil-free funds score quite well in this. So our fossil-free CanGlobe fund has a positive impact of 14, and then it has no negative impact because we make sure that we don't have that in the portfolio. So its net impact score is 14. And then we also have an impact fund. So our fossil-free high impact equity fund has a net impact of 58. So that's versus its benchmark of 3. So it really surpasses its overall benchmark. And even our non-fossil free funds do quite well when it comes to net impact as well. So it's something that we're excited about and excited to share.
Great. So we look forward to having that report available to our clients. We'll end it here. Thanks, Mike, for your insights. And thanks, everybody, for watching. And if you have any questions, please contact your portfolio manager. And have a great weekend, everybody. And we'll see you back here next week. Thank you.